Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Hi everybody, this week we have 3 interesting webinars lined up for you. First one is on the topic real estate versus equities. So in this webinar we'll be discussing about the pros and cons of the real estate market and also how you can allocate between real estate and equities. Second one is on good investing at bad times. So here we'll be discussing about investment strategies which can weather all market conditions. Third one is on will the US elections impact the stock market. So if you are someone who is confused on how the markets will react from here, do tune into this webinar. All the registration links are given below in the description. Do check it out. Hope to see you all there. Thanks.
In today's video, we're going to talk about mutual fund flows and whether they're too good to be true. If you've been tracking the data, you would have noticed that AMFI published their report for October 2024 and it's been grabbing headlines with equity flows touching 41,000 crores and having a 44-month streak of being positive. So, is the headline all that we need to look at, or can we decipher more from the data points that AMFI has published? Through this video, we're going to look at some of those data points and what it means for investors and markets at large. So let's get into it. The first data point that we're going to look at is with respect to SIPs or systematic investment plans. Now, SIP flows have touched an all-time high at 25,000 crores, higher than the previous peak, which was last month in September. But when we actually look at what's happening on the SIP front, there are some signs that investors are not using this powerful tool as effectively as they can. Firstly, what you notice is that the SIP stoppage or the SIP stoppage has actually gone up to 61%. It was marginally lower last month, but the SIP stoppage has actually been increasing, which means more and more investors are actually pausing their SIPs or stopping them altogether. This is problematic because that means investors are looking to time the market, specifically given that October was a very weak month for broader indices. The second data point with respect to SIPs that we can look at is the pace of new SIP registrations, which has also slowed down, which means investors are not really looking at SIPs as a tool for wealth creation. The second data point that we can look at is actually where is the bulk of the money going. And if we look at the split between, say, large, mid and small cap still command a larger portion of the flows than their blue chip peers. But the second interesting thing is that money is going into thematic funds. So of that 40,000 crores that we were looking at, about 12,000 actually came from thematic funds. About 12,000 crores actually went into thematic funds. Of this, 3,500 crores were collected in NFOs. Now, sectoral and thematic funds actually tend to have a much higher risk profile than, say, a traditional large cap or flexi cap fund, primarily because thematic and sectoral funds operate in a very niche space. The cyclical nature of these funds is more pronounced, which means it can be much more volatile than the broader market as the cycle turns. So, the other important thing is that NFOs tend to happen when there's an established performance record, and that means that there's more of a momentum than a value trade going on in those funds. So when we look at these two broad sets of data points within the AMFI report that was published, what we can observe is that investors have decided to step away from their zone of safety into slightly riskier choices, whether it's in terms of timing the markets with their investments, ignoring some very powerful and helpful investment tools in a volatile market, or in terms of choosing where to allocate their money. You are seeing a risk-on sentiment, while the market at the same time has actually been showing us more of a risk-off sentiment. October was a pretty tough month for the Nifty, yet investors seem to be ignoring safety and moving towards higher risk. What do you think about investors and how they're handling the markets? Let us know in the comments below.